Stocks ease after a steady opening as global markets remain weak. IT and healthcare lose ground while metals buck the trend.
Hero MotoCorp skids after margins shrink and economy segment growth concerns linger, despite analysts turning positive on the two-wheeler sector as a whole.
Amara Raja Batteries charges up, pulling Exide in tow as the street cheers a sharp improvement in profit margins and a pickup in sales across segments.
Ajanta Pharma, SKF and Orient Electric as well as Schneider slide while GMM Pfaudler, Ethos and Siaram Silk jump post their earnings. Oil major HPCL slips after analysts downgrade the stock while IEX sulks on a weak update.
Hello and welcome to Halftime Report. I'm Ekta Batra, with me Sonal Butra as well as Mangalam Malu. Well, it's turning out to be a day which is quite quiet on the indices at least, but it's a lot about specific stocks. You just saw the flash go by that Amara Raja is seeing the best gains that it has in a decade. So there's a huge amount of volume and price action on Amara Raja. But separately, a lot of sectors seem to be doing well. So a case in point would be the entire hospital space. After Max's numbers, we are seeing Rainbow deliver on the upside as well. So Rainbow Medicare is up around 12% odd. Aster DM is at the best levels that we've seen in a year odd. Separately, from the entire banking space, just watch out for the likes of Bank of India, Canara Bank, all from the PSU space. Both these stocks at fresh 52-week highs, and State Bank of India also at the best levels in a year ahead of its numbers tomorrow. So a lot of stock-specific action, a lot of sectors in focus.
That's
yes, indeed.
Go ahead.
Well, we do have with us Rainbow Children's Medicare. Ekta just spoke about it. And we have with us the management. A good set of second quarter numbers. Occupancies have inched up in the quarter, aided by seasonality. We have with us Mr. Ramesh Kancharla, who's the chairman and MD of the company. Thanks a lot, Mr. Kancharla, for joining in. You know, the street likes these margins and the average revenue per bed. Can you tell us what the outlook on the same is? I mean, will these margins sustain? And going forward, what kind of ARPOB can we expect?
Well, thank you very much. See, what we have seen is in the first quarter, we posted good results. In the second quarter, it's been a fantastic results. So what we have seen is a children's healthcare. In the last 2 years, we have kind of been was a very different business because the children's healthcare has taken a huge hit negatively because COVID is not a major factor for children's hospital business. So therefore, now we're coming back to normal. It's completely what we see is a normalcy. Perhaps the Q2, what is kind of we have witnessed is there is a more pronounced viral infections, which have led to the more admissions into the hospitals, which is why the occupancy has been pretty high all through the across the geographies. So we have kind of delivered a kind of a great clinical care, and also that resulted in excellent clinical numbers as well. As we always kind of been saying that with the hub and spoke model, very unique business model of children's healthcare, and also the reputation of Rainbow Children's Hospital. So all these things put together that, we have earlier said, for us to kind of do our pre-Ind AS EBITDA about 25% is something which is achievable consistently with our operating metrics. I think that's what I would stick to. As we move forward, one thing I would certainly say is that, we have come back into the business. All the operating metrics are pretty good. And as we see in future, we're confident that what we are able to deliver in the next 2 quarters, the overall year would go well.
Sure. So I can definitely vouch for the fact that a lot of children are suffering from viral infections, and probably one of the reasons is because, all of them have come back out in the open post-COVID-19. So there is a huge amount of exposure which is taking place as well. But that brings me to the occupancies which you clocked in this quarter, over 60% odd. Is that a one-off this quarter simply because of the aberration that you've probably seen on account of seasonality? And what would you probably guide for in terms of, say, working occupancies in the next couple of quarters?
See, generally, we have done the business very well. Even in the occupancy is about 55% also. What's important is what the quality of the business we do. So in the current quarter that we had a lot of seasonality business, which is why even our average occupancy, average revenue per occupied bed is perhaps lower compared to the normal quarters. So question here is that for the quality business versus occupancies. I would always go for the quality of business and not too much focus on the occupancies. Occupancies are important, but at the same time that, the quality of the business, what we do, because it's not just a primary, secondary care children's hospitals, what we are doing. It's a pediatric multi-specialty hospital.
30 lakh shares being added. It already had the maximum open interest. The 18,000 put comes up for you, and that one too has added close to around 50 lakh shares in open interest. That's telling you that the street believes that at the near term, 18,000 is an important support zone. But for the entire week, smart money is playing a straddle strategy. Basically, they're selling one 18,000 call and one 18,000 put, and the combined premium on that is around 250 odd rupees. So they would make money only if the Nifty by next Thursday is between this range of 17,750 at the lower end and 18,250 at the higher end. So that's exactly what the smart money is doing. But as far as the Nifty bank is concerned, and that's extremely interesting, because yesterday as well, the 41,000 put was extremely active with maximum open interest. We opened below that, recovered past that 41,000 mark, and now as we speak, we're about 150 points above that 41,000 mark. So that is an important support to watch out for a premium of around 200 rupees, maybe 40,800 to 41,000 are important levels to watch. Whether they confirm technically or not as well, we have Prakash Gaba joining us on the show. Prakash, what will you do with these indices? Prakash, what does one do? Is 18,000 an important support for the Nifty? What are you looking at in terms of individual stocks and indices?
Yeah, 18,000 certainly, Mangalam, is a very important support to work with. So I think as long as that holds, I think it's fine. It is holding so far. But market is into a range-bound situation. Two few reasons for that, today being Friday and Tuesday being a holiday. So it's not, and it needs to come out of this range. So far, it's not breaking down, which basically means this is a consolidation. So if it takes out the high of yesterday, and I think that will be a good sign, and maybe we will see a gap up open, maybe on Monday or on Wednesday. But looks like it should trade sideways until then.
You know what my takeaway apart from the levels was that today is a Friday and Tuesday is a holiday.
It is the last holiday for the markets this entire year.
Oh,
but we should have an index on how many people taken off on Monday, because today is a Friday. We have Saturday, Sunday, Monday, and you have
this is the only last long weekend left.
Oh my God, there is my thunder. It's gone already. Okay, that is about the holidays. But Prakash, any individual names that you're looking at?
Yes, certainly. I think I like Siemens. Siemens is looking good. It's shown its head up. 3 days of an up move, including today. Looks like it's trading at 2971 Siemens. With a very good chance it can climb to around 3,000 zone. That's the level I'm looking at. Stop would be 2960. So if you look at risk reward ratio, still is in favor. So Siemens looks like a buy. Second stock that I would look at perhaps is ACC. It's getting a beautiful breakout. On a higher time frame basis, medium term it looks good to me. Intraday also is looking good. 2512 is the level it's trading at now. Can it go to 2,600? Yes, it can go there. Just have a very tight stop below 2590 and trade long here on ACC.
Okay, just a quick last, I just had a quick question with regards to Hero Moto, which is seeing this amount of weakness. It's just about held up with a gain of around 5% on a year-to-date basis. Would you buy into this weakness, Prakash?
Well, for me to buy, I need to see strength. I don't want to buy in weakness, hoping that it will go up. I don't know where the weakness will stop. So far, it looks okay. And very good chance it could see a slide to around 2,500. Now, if it sees the bounce closer to 2,500 or a weakness in the weakness, that will tell me that might go up from here. So far, I'm not seeing that. So far, I'll wait for a wing, maybe around 2,500. That's the place I will look at for an aggressive buy.
Okay. All right, Prakash, we're going to let you go on that note. Thanks, as always, and have a great weekend as well. So that's the word coming in on the technicals for the Nifty, just about holding its head above the water in the green, so up around 2.5 points, moved into the green. Really, it is going to be trade in a tight range, and volatility in a tight band is what we can probably expect in today's trading session. Time for a short break. Up next, we will be speaking to one particular stock which was in focus, Relaxo Footwear. The stock hit a fresh 52-week low post its numbers yesterday. We'll get in touch with the management on the other side. Stay tuned.
Welcome back. It's time now to get the management of Relaxo Footwear, and it's an important one because remember the stock has corrected about 35% from its highs. The last couple of quarters were weak. The second quarter in particular on account of a double whammy. Today the stock is seeing some bit of an up move, but remember yesterday was one of the big losers. The double whammy was one, on the demand side there was weakness because at entry level there was affordability issues, and secondly on the input cost as well. The company had been sitting on high cost inventory. So is the worst behind them or not? How is demand looking? We do have with us Mr. Ramesh Kumar Dua, who is the managing director of the company, joining in. Thanks a lot, Mr. Dua, for joining in. And that really is the first question. You know, margins at 8.9% have slipped to the lowest level ever, if not in the longest time. Just wanted to understand, is the worst behind in the second half? Can we expect some improvement in demand and margins?
Yeah, definitely. You know, just a small history. Raw material like our key material, EVA, PVC and some other polymers, they have been very volatile. Just to give you a sense, one of the key material like EVA, ethyl vinyl acetate, which we consume around 1,000 ton every month. The price of this material was 130 rupees pre-COVID. And after COVID, it started rising slowly and reached a level of 300 rupees. And then after a quarter this year, it started falling again. And it came down to around 200 rupees. Now in such a scenario, such a wide 1,000 tons per month, and we have to maintain a long supply chain because material is imported, our consumption is very huge, we can't depend upon local sources. So, and there is uncertainty supply chain during this COVID period, so we have to have sufficient stock so that there is no manufacturing disruption in the system. Now, this is something very strange that after going to 300, the material came down to 160, 70, even 200. So now we are having this high cost inventory in the system. And at the same time, affordability of the mass segment that we are serving has gone down. They are also facing inflation. So when the prices were going up, we had to pay price corrections. And there was a 7% GST increase also by the government, January onwards last year. So all this thing led to price increase repeatedly. And at one point, there was, affordability of the mass segment was going down. So sales started.
Mr. Dua, you know, we are aware
later
of
this year.
Yes, Mr. Dua, we are well aware of the challenges that the company has faced this quarter. Your volumes were down 15%. Your margins have come in at around 8.9%. Based on the fact that you are sitting on high-cost inventory when it comes to raw materials, as well as demand is hit in your mass segment, what can you guide us in the second half? What will business look like in terms of revenue as well as margins for Q3 and Q4?
You know, our high cost inventory will be cleared in this quarter, the quarter 3. So, and we have taken some price correction also in September. As a result, demand is looking up, and this quarter our performance will be better than the quarter 2, and you will see some growth also with respect to last year quarter 3, and some margin will, some improvement, because all inventory in this month we are consuming the old input high cost inventory. But the quarter 4, January, February, March, sale will also, I think, boost, and our bottom line will also improve.
So, Mr. Dua,
one thing we must see. Yeah.
Yes. So, if margins are going to improve, and you are saying that quarter 4 will be an improved quarter for you, what is the general, say, margin number or a margin band that you can tell us? And what is the kind of volume growth as well that you're expecting? If you can give us a broad idea as well here.
So, I can tell you this only quarter 3 first, because we are passing through a very volatile, difficult situation. Since our old stock will flushed out, which is taking its own time, because there are various MRPs of the products floating in the market. Even retailer wants to clear his inventory, distributor wants to clear its inventory, and our inventory is getting cleared. So it is a little long process because 6 months supply chain we have to maintain for uninterrupted interruption of manufacturing. So once this high cost inventory clears, January, February, March, that new MRP, new inventory goes in the system, though our sale will be much better. As far as bottom line, EBITDA or these things are concerned, still it will be better than what it is today, but it will be pressure because inflation, the mass segment that is facing. So we have to keep our prices very competitive in the market.
Right. So,
that is one of the things. And what I hope this monsoon is better, and then buying power might improve of the masses also, and that will also help the company.
Right. I understand the macros are extremely unfavorable, the raw material as well, the environment is volatile. You've been increasing your capacity in this environment. So I just wanted to understand what exactly is the current capacity utilization, and an optimum capacity, what kind of revenue can you do?
Currently capacity utilization is just around 50%. And optimum, you can say 65%. We have to always have sufficient inventory because industry is seasonal. You can't have throughout the same demand and production also. So that's it. Regarding what you call it, demand will in January, February, March will be better.
Okay. Mr. Dua, do you think that you're probably, at least in the interim, going to look at the premium segment more closely simply because of demand faltering within your mass segment? So hence, maybe your focus would be towards premium, maybe your energies would be focused in terms of increasing revenue there?
Yes, we are taking a note of it, and already we have taken steps to increase the production of other category, which is around 50%. Our Sparks brand contributes 40%, and there are some other premium segment or part of other categories also. So around 50% is a mass segment and 50% is other segment. We have doubling up the capacity of sports shoe segment, which will augur well for the coming. It will take 6 to 9 months for increasing the capacity. So next year things will be much better.
Okay.
Because our capacity of athleisure will go up.
Okay, athleisure will go up. So the newer capacities or the newer categories going forward, what kind of revenues will come in from them, and what is your current updated market share?
Past 2 quarters, our market share has been affected because our competition on local market, because we're getting raw material at a cheaper price. Local market came, the same thing which we bought at 300 rupees, local were able to source at 160 rupees, 180 rupees. So as a result, they became more competitive. But in the coming quarter, that's the advantage which they had for short time, maybe in these 2-3 quarters. That will be over, and we will become very competitive. Things will improve.
All right. Final question, Mr. Dua. You said that sports, your capacity will double in the next 8 to 9 months. Just wanted to understand currently what proportion of your revenue comes from there, and what will the addition of these facilities do to your overall realizations? I'm looking at it, it's been, hovering between 150 to 170 over the last few years. Going forward, what could the realizations of the company be?
Let us talk. We have, different categories. First thing, we have 4 brands: Relaxo, Bahamas, Flight, and Sparks. Sparks is contributing around 40% to the total turnover. And Flight, which consists of PU-based slipper, EVA-based slipper, that is also around 40%. And our other Relaxo and Bahamas, which has got the maximum hit, it is now 20% of the total share of turnover. Next year, when we have added capacity, definitely that Sparks brand will be much ahead. of other categories.
Okay. All right, Mr. Dua, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Relaxo guiding for probably in a tough second half as well, maybe a recovery from the Q2 levels. The stock has recovered from the 52-week low that it hit yesterday. That's Poly Medicure's numbers, good revenue growth as well as profitability. It is a medical device manufacturer, so revenue is up around 23-odd%. EBITDA is up around 27-odd%, so good going for Poly Medicure at this point in time. It does manufacture medical devices across categories for oncology, infusion therapy, urology, gastroenterology. So you can see there's been a little bit of recovery in terms of margins as well. 23.5% is what they've recorded. Well, we need to take a short break on that note, but on the other side, we'll get you a lot more stocks in focus as well as earning expectations from Cipla and GAIL. Stay tuned. Welcome back. Well, for the stock, it's rather for the markets, it's a little mixed at this point in time. We have the Bank Nifty, which is down around 0.3%. Just watch out for Bank of Baroda as well. It releases its numbers tomorrow along with State Bank of India. Hero MotoCorp, there are some conference call takeaways. Remember, it's the top loser on the Nifty at this point in time. It's aiming to increase its parts business revenue to 15% from 13%. Excited about the EV opportunity going forward. So we'll get you more takeaways from that, which is on your screen. But one stock which I'm tracking is also Cipla, which is releasing its numbers today. The conference is at 3:30 p.m. by the management, so it will probably be out during market hours. Revenue is expected to grow around 5-odd% this quarter. Margins are expected to come in at around 21 to 22-odd%, and a profit growth of around 8-odd%. Now, a couple of key factors to watch out for is that the US revenue is likely to grow marginally on a Q-on-Q basis. Estimates are that the US revenue could come in at around 165 to $170 million. This compares to $155 million in the previous quarter. The Q-on-Q rise would be on account of the inhaler portfolio that they have. For example, albuterol, the market share is expected to be steady. Bruvana generic is expected to probably go up on a Q-on-Q basis by 500 basis points, and market share in other segments as well. Price erosion could probably negate the gains in the US markets. India growth to be stable as well. Remember, they had one of the most comprehensive COVID-19 portfolios, so there will be a base impact which will come through as well. In terms of commentary, Goa plant, which was re-inspected by the US FDA, US sales outlook, they have a number of launches in their pipeline, such as Advair generic, Abrixon. So these are particular drugs that the street would like to know about for Cipla. Remember, stock is actually quite resilient, sitting at a fresh 52-week high or thereabouts. So hence, there's a lot of optimism on the street.
Okay, that is about Cipla. So let me take it forward and talk about GAIL, because that is also due to report its second quarter numbers today, and not looking like a good quarter for GAIL because the macros are not that great. We saw gas prices going through the roof, and Gazprom shipments were also delayed for the company. So overall, a revenue decline of 6% this time, leading to an EBITDA decline of 40% and margin decline of almost 400 basis points for the company. Also, a profit decline of 31.5% at 2,000 crore rupees is expected for GAIL this time around. As I said, across the board, there was weakness, lower volumes and profitability in the gas transmission and gas marketing businesses expected. Gas marketing, remember, is the most volatile segment of the company. Transmission will be impacted by lower gas allocation because there were not enough gas volumes available, and that is why there is an expectation of 4% quarter-on-quarter decline in transmission volumes this time around. Marketing will be impacted by two reasons. One, there were no shipments from Gazprom or limited shipments from Gazprom because of sanctions, and there were spreads were declining in oil versus Henry Hub gas prices as well. So GAIL tends to be negative for GAIL. EBIT loss will be expected in the petchem business, lower realizations. That is something we saw in IOCL's numbers and Reliance numbers as well. And decline in LPG production is also expected, which will impact realization. So in the LPG segment, there is an expectation of a 15% decline, and that is something that will impact margins. So all over across the board, weakness is expected for GAIL this time around.
All right, can't say the same for Titan because it is due to report its second quarter numbers today and the stock is virtually at a record high ahead of that. Why is it so? Because the company has already given us a cheat sheet, a sneak preview into what the numbers are likely to look like. So, you know, we're seeing an overall sales growth of almost 18% in the second quarter, led by the jewelry division growing at around 18% on a high base. Remember, same time last year, the jewelry business grew at around 66%. So that means the 2-year revenue CAGR in that business would be around 40%, and other sectors as well. They've said watches would grow 20%, eye care would grow 7%, other businesses would grow 58%, and Carrot Lane would grow 56%. What does all of this mean in terms of their overall numbers? Analysts had an easy job to do. Just take those numbers and punch it in. Revenue growth of 18% would lead you to around 8450 crores on the standalone top line. EBITDA up 18% as well because margins are sustained. The share of studded jewelry is higher, and net profit is likely to grow by 20%. 770 crores is what the street is working with. But these are numbers that the street knows. What the street would like to know is how the performance in the festive season was, because that is an important quarter for Titan. With that, we'll take a short break.
Okay, after doing that, yes, we will. On the other side, our commodity segment, Manisha Gupta will join us.
Welcome back. For the markets, it's holding quite stable at this point in time. So let's move away from equities and talk about commodities. Our commodities editor, Manisha Gupta, is here with us to tell us what she's tracking today. Manisha, over to you.
Ekta, thank you so much for that. Well, what all you saw as the New York market yesterday clearly doesn't seem to be mirroring that right now. We've seen buying in Asia, and right now it just gets even more better. Overnight, we saw the crude oil prices decline by 2%, but it's trading 2% on the higher side right now. On your screens, 90s back for NYMEX and almost nudging $97 per barrel for the Brent prices right now. Peter McQuire, CEO at Exim Australia, now joins us to talk about that. Peter, hi. What a rebound from where we were trading in the New York session yesterday. What do you give this to?
Well, Manisha, good afternoon. I think it's just whipsawing, and it's hard to really pinpoint what do you think are the key points of it. It's really volatile. You've had a couple of information drops as far as IEA warning of gas shortages and into 2023. I just think it's just wild trading, all what they're pushing it around, and that's what happens in these markets, Manisha, 2 and 3% moves.
I remember, Peter, last time we spoke and we were trading at 93 to the Brent, and you said we are closer to 100 than to 90, and that really seems like on how the markets are trading right now, inching more closer to that $100 per barrel mark. What you think can lead the prices closer to that 3-digit mark?
Well, Manisha, I would have thought that before considering they were selling a lot of that petroleum reserves, the strategic supply, that their prices would have actually edged a little bit lower, but they're really galloping ahead. That US dollar also is increasing from 110 to nearly 113. So there just seems to be momentum for the crude market. Everything's the focus and leading up to the midterm. So, yeah, you might even be at $100 by Tuesday.
All right. And, there are various factors to watch out for. We've seen a decline in U.S. inventories. The OPEC and allies production has been on the lower side. The European Union embargo on Russian oil are some of the factors that markets are looking at. Add to that the fact that this is winter season demand as well coming in.
Well, exactly, Manisha. And, it should be a very cold winter. So the demand there for heating oils and all the distillates, you've got a very short supply as far as diesel globally. So this is also something that we need to consider. And at the moment, I just think that the crude market seems to be moving to the upside. So it's got the momentum, and it just seems to be a little bit galloping away. It's hit everyone between the eyes. And yes, as I mentioned, I think, over 100 in the short term could be very achievable.
You said above 100. What kind of levels are we watching then on the higher side? I mean, are we looking at 105 or even higher? What is the range you're working with?
Well, Manisha, I'd like to answer that in about 2 weeks' time, because I won't be surprised if it's 103, 104. I just think that there just seems to be a lot of momentum moving to the upside, and the overall, I think, consumption patterns are going to be strong over that winter period. So everything seems to be lining up for a few extra dollars as far as price spike. And that's what the traders are rubbing their hands with a little bit at the moment, because it's volatile and that's offering great opportunity.
Clearly. I also want to talk about metals because, while the economic data has not been so strong, we've seen a 75 basis rate hike come in from US and European Union and Bank of England too. And with China saying that it's a speculation that they will ease any of their COVID restrictions anytime soon, that did lead to some decline in commodities, including metals as well. But look at the trade today, all metals trading in the positive. So is this short covering? Are the markets now watching out for US non-farm payroll data that comes in today evening as well?
Well, they'll be looking for non-farm in a couple of hours. I think that's probably about 7 or 8 hours till that drops, Manisha. And also, you're going to look at what happened as far as China today and Hong Kong. Big move to the upside in equities. So, yes, it could be a little bit of a turnaround. And if they come out with a COVID policy that's a little bit softer as far as the Chinese situation, then that could be a good thing. And they just start to open it back up. So, yeah, we're all sitting here looking into the big animal that is being China and what impact it's going to have to demand as far as base metals and everything else.
And a definite short covering, I mean, as we've seen in crude and metals is what you are seeing in silver as well. After that sell-off that we almost a sell-off in the New York session yesterday, the kind of buying back that we saw in metals, including silver, was something of a phenomena. How are you looking at silver prices going forward?
Well, it's 1973 at the moment, 1974, Manisha. It seems to be bid up strongly. So I think that, there might be a little bit more momentum to the silver market. They tell me that, the traders are loving it and plenty of people are hoarding it from a physical standpoint. So that's a good sign. And I still believe that silver's its best days are ahead of it. So let's just wait and see where we are by Christmas. But I won't be surprised if it puts on a couple of bucks.
Absolutely, and a very good market actually when you look at commodities right now. Of course, some support coming in from that weakness in US dollar index as well, but mostly short covering and the bulls really coming back in case of commodities in some big way today.
Okay, all right, Manisha. Thanks very much for taking us through what's taking place in the entire commodity space. Hero MotoCorp continues to be in focus on account of its conference call takeaways. The company is optimistic on demand prospects going forward. That's the word coming in from the management. Just keep your eye out on a stock such as Karnataka Bank, which has had an absolutely fantastic week this week. It's up around 40% on a week-to-date basis. It's gaining around 11% in today's trading session. So it is a lot about these specific standalone banks and their performances in Q2 as well. Well, with that, it's a wrap on Halftime Report. Business Lunch will take all the action forward. Thanks for watching.